Hey everyone, welcome back to InvestiPower. In today's video, we're going to talk about something every investor should avoid, the common mistakes that could ruin your investment journey. Whether you're just starting out or have been investing for years, it's crucial to learn from others' mistakes to avoid making them yourself. So grab a pen and paper, and let's get started. Alright, let's dive into the first mistake. But before that, let me ask you a quick question. Have you ever made a rash investment decision out of fear, excitement, or just a lack of knowledge? Let me know in the comments below. Mistake number 1, emotional investing. This is probably one of the most dangerous mistakes new investors make. Often, when the market is going up, people get excited and buy in a frenzy. But when the market crashes, they panic and sell their investments in fear of losing money. Let's take an example. Here's what happens. This person sees that their stock is rising and buys more, hoping to get rich quick. But when the market crashes, they panic and sell off their stocks at a loss. Emotional investing leads to buying high and selling low, the exact opposite of what you want. To avoid this mistake, you need to have a long-term investment plan. Stick to your strategy, and don't let short-term market fluctuations make you act emotionally. Having a plan helps you stay focused and disciplined, no matter what happens in the market. Mistake number 2, lack of diversification. Moving on to mistake number 2, lack of diversification. Now, this is something a lot of beginners don't think about, but it's crucial. Putting all your money into one stock or one sector can be risky. What happens if that stock tanks? You lose a lot. Diversification means spreading your investments across different asset classes like stocks, bonds, real estate, and even alternative investments. It helps reduce risk and increases your chances of steady returns. If you're putting all your eggs in one basket, it's time to rethink your strategy. Diversify and make sure you're not overly concentrated in just one asset or one industry. Mistake number 3, timing the market. A lot of investors think they can predict when the market will go up or down and try to buy low and sell high. But the truth is, even the experts get it wrong. And selling at the top of a rally, only to end up losing money. Here's the thing. It's nearly impossible to time the market perfectly. Even if you get it right once, you won't always be that lucky. Instead, focus on buying good investments at reasonable prices and hold them for the long term. A smarter approach is dollar-cost averaging. This means investing a fixed amount of money at regular intervals, regardless of market conditions. Over time, you'll buy more shares when the price is low and fewer when the price is high, reducing the impact of market fluctuations. Mistake number 4, ignoring fees and expenses. Many investors don't realize how much fees can eat into their returns. Whether it's high management fees or transaction costs, these hidden expenses can add up over time. Imagine investing $100,000 for 30 years, and your fund charges a 2% annual fee. Over time, those fees can cost you tens of thousands of dollars. Instead, opt for low-cost ETFs or index funds that have minimal fees but still offer solid returns. Pay close attention to the fees you're paying and always consider how they will impact your long-term gains. Mistake number 5, chasing trends and speculation. You've probably heard about the latest hot stock or crypto coin that is making people rich. But following trends without doing the research can be dangerous. Sure, there's the allure of getting in early and making a quick profit, but this is speculation, not investing. Speculative investments can be highly volatile and unpredictable. So before jumping on the latest trend, ask yourself, is this investment aligned with my long-term goals? Instead of chasing trends, focus on solid long-term investments that match your risk tolerance and financial goals. Stick to your strategy and avoid the temptation of chasing the next big thing. So, those are the 5 common investment mistakes you should never make. Emotional investing, lack of diversification, timing the market, ignoring fees, and chasing trends. Avoiding these mistakes can set you up for a much smoother investing journey. Remember, investing is a marathon, not a sprint. Stick to your plan, stay disciplined, and you'll see long-term success. If you found this video helpful, make sure to give it a thumbs up, subscribe to InvestoPower, and hit that bell icon so you don't miss any future videos. And let me know in the comments if you've ever made any of these mistakes, or if you have any questions about investing.